All right, let's dive into medical tech company InMode's Q3 2025 earnings. Now, at first glance, the headline numbers look like they've fallen off a cliff. But if you dig into the CFO's remarks, a completely different story starts to emerge. Let's get into it. When you first open up an earnings report, your eyes immediately go to that big top-line revenue number, right? You want to see how it stacks up against last year. And for InMode, well, that comparison looks pretty shocking. Just look at this. Q3 last year, they pulled in $130.2 million. This quarter, it's down at $93.2 million. On paper, that is a steep drop, and it definitely makes you go, uh-oh, what's happening here? So that's the big question, isn't it? Why the slide? Is this a red flag that the business is in trouble, or is there something else going on that the numbers aren't telling us right away? Well, it turns out there is a massive asterisk next to last year's number. And once you understand what that asterisk means, the whole story of this year-over-year comparison completely flips on its head. $31.9 million. Just burn that number into your brain for a second. This single figure is the entire key to understanding that big revenue drop we just saw. This is the context we need. So here's the deal with that number. According to the CFO, that nearly $32 million came from a huge, one-time batch of pre-order sales that all got booked in the third quarter of last year. It wasn't normal, repeatable business. So if you mentally pull that one-off event out of the equation, this quarter's performance looks totally different. Okay, so with that huge piece of context in mind, let's dig for the real story. Where did InMode actually show some muscle this quarter? The CFO's remarks point to some seriously healthy trends happening just below the surface. And boom, here's a key one right here, a 26% increase. That's not a tiny little bump. That is some very real, very significant growth in a super important part of their business. So that 26% growth is in their consumables and service revenues. Now, why is this such a big deal? Because it means that the doctors and clinics who already bought InMode's big machines are continuing to use them a lot. This is that beautiful, sticky, recurring revenue, and it's a fantastic sign of long-term customer satisfaction and adoption. The company is also spreading its bets geographically, which is always smart. You can see the US is still their biggest market at 57%, but wow, 43% of their sales are now coming from international markets. That kind of diversification is a huge strength. And it's not just a big piece of the pie. It's a growing piece. The CFO reported that sales outside the US actually grew by 10% compared to this time last year. That tells you their global expansion plan is really starting to pay off. So growth is great, but the real test of a company's durability is its financial health, right? So let's pop the hood and take a look at InMode's profitability and, just as importantly, its balance sheet. Okay, first, a super quick explainer. Gross margin. It sounds complicated, but it's not. It's just the percentage of money a company has left from sales after it pays for the direct costs of making the thing it sold. The higher, the better, generally speaking. Now you'll see InMode's gross margin did dip a bit from 82% last year down to 78%. But the CFO was really clear about this. It was not a surprise. He basically said, yep, we knew this was coming. It was an expected dip caused by tariffs, and it was already factored into their plans. And as you look at these other profitability numbers, you can totally see the shadow of that big one-time sale from last year. Of course, things like operating margin and net income are down when you compare them to a quarter that had that massive unusual boost. It all tracks back to that original headline number. But now, we get to what might be the single most powerful number in this whole report. Just look at that, over $500 million. This number says so much about the company's stability. That's how much the company has in cash and other easy-to-access assets. Having a balance sheet that strong is like having a financial fortress. It gives them a massive cushion to get through any tough economic times, to invest in new tech, and to run their business without needing anyone else's money. So, after a quarter that looked messy on the surface but pretty solid underneath, what does all this mean for the rest of the year? What is management telling us to expect? This is a huge vote of confidence. The CFO confirmed they are not changing their full-year guidance for 2025. They are reiterating it. Despite all the noise this quarter, they're still telling the world they expect to hit these big targets for revenue, for margins, and for earnings. They are holding the course.
And really, that brings us to the final thought. When you look past that crazy headline number and you see the growing recurring revenue, the strong international sales, that huge pile of cash, and management's steady confidence, it paints a very different picture, a picture of resilience. So the question is this strong financial foundation exactly what a company like InMode needs to navigate whatever challenges lie ahead?